I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, Barclays Bank decapitated.
I'm sorry, I'm disappointed, and I'm also angry.
The bank's CEO quits. The chairman's gone too after a scandal that may have affected millions. Also, we're in Mexico, where Enrique Pena Nieto says he won the presidency fair and square. He also tells us how he plans to shake up the Mexican economy. Plus,
I'm Laura Kyle in an illegal gold mine in Burkina Faso, where hundreds of thousands of people are trying to cash in on the country's gold rush.
hello everyone. Before this week, you may never have heard of Libor, but thanks to the actions of a 322-year-old British banking institution, it's been all over the headlines and for all the wrong reasons. We're talking Barclays, which in the space of a few days lost its CEO, its chairman and perhaps its reputation too, after British and US regulators fined it $453 million for manipulating the Libor rate. In a moment, we will explain Libor and how this potentially affects you. But first, just a quick look back at how it all unfolded.
Morning. Are you the fall guy?
Are you the fall guy? That was the question on Monday, which drew no response from Barclays chairman Marcus Aegis. He'd resigned, saying that as chairman, quote, "the buck stops with me." Only it didn't. The British government announced there'd be an inquiry.
We've got to get to the bottom of what has happened. We've got to do that quickly.
And Britain's Serious Fraud Office said it would take a hard look at potentially criminal activity over the fixing of interest rates. At this point, CEO Bob Diamond appeared to be standing his ground. But suddenly, on Tuesday morning, he and his chief operating officer, Jerry Delmisia, were gone too. In a statement, Diamond said, "My motivation has always been to do what I believe to be in the best interests of Barclays. No decision over that period was as hard as the one that I make now, to stand down as chief executive. The external pressure placed on Barclays has reached a level that risks damaging the franchise. I cannot let that happen." Was he referring to pressure from the Bank of England and politicians? Britain's Chancellor of the Exchequer certainly seemed satisfied.
I think Bob Diamond's made the right decision for Barclays, also the right decision for the country, because we need our banks focused on lending to the economy, not on the scandals of the past.
But Barclays fought back. It disclosed Bob Diamond's notes from a conversation he had with the Deputy Governor of the Bank of England back in 2008. They revealed he'd been asked why the bank's Libor rates were so high. Barclays claims Delmisia concluded that was an instruction to Barclays from the Bank of England to lower the rates. By Wednesday, MPs were quizzing Diamond on this.
I didn't believe it was an instruction.
So what was it, a nod and a wink?
The most important thing of that note to me, Chairman, was the comment that there was a perception in Whitehall that our rates were high.
He was also asked about emails from the Barclays staff involved in manipulating that Libor rate.
When I read the emails from those traders, I got physically ill. It's reprehensible behavior, and if you're asking me, should those actions be dealt with? Absolutely.
And it's fair to say I think he probably wasn't the only one feeling physically ill about all of that. Now, before we talk about the implications of all of this, just a quick word on Libor itself and how it actually affects us. It is an acronym. It stands for London Interbank Offered Rate and is a measure of how much banks have to pay to borrow from their rivals. Basically, each day you've got Barclays there and the 15 other major banks submitting the rate at which they are able to borrow. The lower the rate, the stronger the bank looks. So then we have the high rates at the top disregarded, so too are the ones at the lowest end, and presto, we have the Libor rate based on an average of the ones in the middle. But then after that, well, the price of financial transactions worth trillions of dollars, in fact, are made every day around the world, and they are set according to Libor. Among them, financial swap deals worth more than $350 trillion. And according to the British Bankers Association, loans totalling more than $10 billion. Mortgage rates are also linked to Libor. In fact, Britain's housing minister believes the scandal may have even contributed to families losing their homes after the credit crunch. So let's put all of this in perspective, shall we? Tony Greenham joining us from London to do that. He is the head of finance at the New Economics Foundation. Aptly, Tony, with the London Financial District as your backdrop there in our London studio. David Cameron was making a point about this week and saying it was outrageous that homeowners might have actually been forced to pay higher interest rates as a result of the Libor rigging. I guess that's the perfect example, isn't it, of how big banks and financial transactions, which most of us still don't actually understand, still can affect the everyday man.
Absolutely it does, and it's not just mortgages. An awful lot of small business loans are priced off this key benchmark rate Libor, as well as it affecting institutional investors, which ultimately might mean your insurance policies, life insurance, pensions funds, and that sort of thing. So it's very, very widespread, and it's quite technical. So people, I think, have a right to expect that it will just be done honestly in the background. It's not something which really the general public should have to concern themselves with in a way, because this is all sort of background complex stuff.
Yeah, and I think the other thing which will outrage is the culture of banking, which this seems to expose. I'm sure you've seen these, Tony, but I just want to refresh our viewers' minds with some of the email messages which were uncovered between Barclays bankers and sometimes between Barclays and other financial firms. Just have a quick listen.
We really need a low 3 months fix. Would appreciate any help.
Done for you, big boy.
Dude, I owe you big time. Come over one day after work and I'm opening a bottle of Bollinger.
Yeah, doesn't that just confirm, Tony, everyone's fears about the banking industry, that this we can do what we want culture is alive and well, and that it will actually be very, very hard to change because it's part of the way the business is done?
Well, I do agree with you. When you read the correspondence, I mean, even as a former banker, it's who's sort of used to that banter and environment, if you like, it's really quite shocking. And I think that's what's really taken people aback. And the culture, in my view, there has been a steady erosion of values over the last 10, possibly 20 years. Some old hands here in the City of London might say it's been going on even longer. But why that is quite a complex story. I wouldn't be so pessimistic as you are that it's impossible to change the culture. Certainly, the famous sort of adage in the city was, "My word is my bond." It was built on trust and integrity, and I don't see any reason why we can't rebuild that. Because do you know what? It's essential to the very operation of banking and financial services that people can rely on professional integrity and honesty.
Well, I'll tell you why I'm so pessimistic, Tony, and that is because, in a way, this is a business. And I'm not just talking about Barclays, I'm talking about the business of banking, if you like. It's something that rewards risk. If a banker takes a risk and pushes the boat out and gets away with it, then he or she will get rewarded financially. The company will do well until it goes bad like this. So it's a kind of business where people will inherently want to push the boundaries like this.
Yeah, no, you're absolutely right. And I think you've touched on there a problem that is at the very core of the modern banking system. We're part of a coalition that has been putting out a call for a judicial inquiry in the UK to really get to the bottom of banking practices. And I think the key issue is conflicts of interest. These, to my mind, are now endemic within investment banking and within banking. So what I mean is that it is the incentives that you're sort of referring to for an individual to line their own pockets at the expense of customers, even of shareholders or of other counterparties that they're dealing with, have become, it seems, too much for people to resist the temptation. And so I think the only answer, well, one answer might be to change the culture, as I was describing, back to one where you can rely on people's professional integrity. But these banks are now so large and so contain so many different operations under one roof. I think the answer we have to look at is breaking them up. The large integrated global banks that combine all these activities and have all these conflicts of interest. I think we need to examine which activities do sit comfortably within a large retail, high street bank, and which don't. Perhaps which activities are more appropriately taken at the risk of the own trader. So in other words, the firm is actually owned by its employees, and then they can gamble with their own money and not with either taxpayers or their own shareholders.
Yeah, very good point there, actually. An inquiry, Tony, is what I want to talk about, though. Will it be worthwhile? I suspect Britain is probably getting used to these sort of long, drawn-out Leveson-esque inquiries. Will it get to the root of the problem, though? Is it worth doing?
It is absolutely worthwhile. I mean, there is a joke sort of doing the rounds that Britain's going to try to recover from recession, but through setting up inquiries to employ everybody. But It is, to my mind, it is the only way, in fact, in which we can restore trust and confidence in the UK banking system. And of course, you know, London as a financial centre, one of the two largest financial centres at the moment globally, is essential to our economy, and therefore, to my mind, it is essential that trust is restored. Only a judge-led, totally independent inquiry can really get to the root of this malpractice and leave everybody feeling that, you know, all the bad news has been got out into the open, if you like, and we can get back to some semblance of normality in banking.
Just a final thought from you then, Tony, and I kind of want a personal view from you. When this Libor scandal came out, were you honestly surprised? You know, people are rightly shocked at what's gone on, but should they have been surprised that this was still going on?
Well, that's an interesting question. I was surprised. I was surprised at the sheer, it seems, scale, and I think what I found quite shocking was almost the normalisation of, well, what's been considered potentially fraudulent criminal behaviour, and the Serious Fraud Office here is considering who and what to investigate. And one can accept that there will always be traders and individuals who will sail close to the wind, and one can accept that where these conflicts of interest exist, you will have people who just can't resist the temptation to exploit them. But it just seems so widespread and deeply embedded within not just one bank, because this isn't about Barclays. It was potentially certainly a lot more, potentially even all of them.
Great stuff from Tony Green there from the New Economics Foundation. Thank you for joining us, Tony.
Pleasure.
And still ahead this week on Counting the Cost. That's entertainment, but is it good business? Is it still possible to make money from clowning around? So we've talked about financial jargon, which you don't often hear about. We're now going to look at a country you don't often hear about, Burkina Faso. The African nation is in the grip of a regional drought, but while a poor harvest and rising food prices are leaving millions hungry, heavy foreign investment has prompted a resurgence in the country's gold mining industry. Production's risen from roughly 12 metric tonnes in 2009 to 33 metric tonnes in 2011, which last year accounted for 13% of the whole economy. But Burkina Faso is still one of the poorest countries in the world, ranked 181 out of 187 on the UN's Human Development Index. And worse still, thousands of those affected by the drought, including children, are now working in illegal pits that have sprung up on the edge of the official mines. Laura Kyle picks up that story now from Essakane in northern Burkina Faso.
Children doing back-breaking work in a squalid camp. These boys are crushing rocks that the girls will use to pan for gold. It's thought that a third of these workers here are under 18, helping boost their family's income. We asked Musa whether he'd rather be in school. No, he said. He'd prefer to be here, earning money. The pits aren't stable and regularly collapse, especially when the rains come. Miners spend up to 12 hours underground with only a torch strapped to their heads. It's dangerous work for a small reward. 1 gram fetches around $50. This collector says on a good day he sees 20 grams, but most of the time it's much less. Hundreds of gold mines like this have sprung up all around the country. They generate some wealth for the people who toil on them, but it's nothing compared to the billions brought in by the industry as a whole. There's a gold rush in Burkina Faso. There are 7 official mines, all of them foreign-owned. 7 more are in the works. Last year, the Burkina government made just over $243 million in taxes and royalties, nearly 13% of its economy. It also has a 10% stake in each mine.
We're setting up a local development fund, which will channel some of the money from the industry and allow people in mining areas to benefit from projects which can improve their lives.
There is some optimism that Burkina's gold wealth will be shared and raise living standards in one of the poorest countries in the world, but that's not the case yet.
There are many mines and a lot of gold, Prices are rising, but what we're seeing is that people in mining areas, especially children, have trouble getting enough to live on.
Chiedezon works with the children in illegal mines, trying to get them back into school. They've got some 2,000 kids into education, but the teachers in this school say it's hard to keep them there.
Because of the gold mines, we can't keep the children in the classroom. They might come in on a Thursday or Friday, but for the rest of the week, they'll be found at the pits.
In a country where jobs are hard to find and a quarter of Burkina's school graduates are unemployed, there are few prospects brighter than gold.
To Mexico now, and leaving aside the dispute over the election, there is a new face to watch at the top. The crowd loves him there. Enrique Pena Nieto. He's young, just 45, frequently described as telegenic. But while he's fresh on the world stage, his party is anything but. The Institutional Revolutionary Party, the PRI, has dominated Mexican politics, sometimes ruthlessly, for most of the 20th century. Now, this is the state of play in the country at the moment, a population of, well, nearly 115 million at the moment, which makes it the 11th biggest in the world. There's an economy worth about $1.1 trillion when you add in all the value of goods and services, which means it ranks, well, 13th in the world as far as economies goes, below Australia, but actually ahead of South Korea, and it's expected to grow about 3.5% this year as well. When it comes to trade, though, Mexico is heavily dependent on the United States to the north. In fact, it sends around 3/4 of its trade over the border. Much of that as well is oil. But poverty is rampant, and about 1 in 3 workers is only earning, well, actually less than $10 a day. But Pena Nieto has promised to change all of that. How tough will that be? Have a look at this now from Adam Rainey.
Mexico has enormous economic potential, but unlocking it will be a huge challenge for the country's new president. It has a strong manufacturing sector, building everything from cars, airplane parts, refrigerators, and electronics. But factory workers often earn abysmal pay, many less than $10 a day. And those wages have actually dropped by 3.5 percentage points in the 6-year rule of outgoing President Felipe Calderón. Economic growth over the last 20 years has averaged just 2.6%. Compare that to India's 7% and China with a 10% average annual growth rate. Nearly half of all Mexicans live in poverty. Enrique Pena Nieto says he has the plan to help grow Mexico's economy by 6% a year and put millions of people to work. He promises to increase tax revenues, open the oil industry to private investment, and make it easier for companies to hire and fire workers. But he faces political challenges to enact his agenda.
It's a divided Congress. I mean, he thought he would win this election by a bigger margin, with a larger number of legislators in both houses, the lower house and the Senate. He doesn't control either one of those, so it's going to take a lot of political maneuvering and skills and compromising and negotiating to accomplish some of the things that he wants.
Another challenge for Mexico, building up its middle class. To do that, millions of people need to earn much more money, and more people need to have jobs. Although the official unemployment rate is around 5%, it only includes those in the so-called formal economy. But one of the challenges for the new government is to get millions of people out of the informal sector, people perhaps who work in markets like this one, selling goods on the street, and get them into formal jobs that provide them with more security. And there are more headaches for the new president. Many economic sectors are controlled by a small number of powerful companies. Most famous among them are Telcel and Telmex, the 2 phone companies headed by Carlos Slim, the world's richest man. Economists say the government needs to create a level playing field so new companies can compete. It's a lot to do on the economic front, but with enormous U.S. and Canadian markets to the north, millions of people here will be hoping Mexico's next government makes good on its promises.
And we had a chance to get the word on those promises from the man himself. Enrique Pena Nieto sat down for a chat with our Latin America's editor, Lucia Newman.
You have said many times that you would not make any kind of deal or negotiation with the criminal organizations. Is that correct?
That is not the way. The state is obliged to ensure that the law is respected and that organized crime is attacked in all its forms. That's why, when my political party was subject to slander, I made it clear that there will be neither a pact or a truce. Head-on combat is what there will be. along with absolute compliance with the law. And let me tell you something else. All this strategy must take place in an atmosphere that is different from the current one. We have to recover our economic growth. A country with economic growth, with greater employment opportunities for all Mexicans, obviously inhibits the ability of organised crime to flourish. Unfortunately, we are seeing many young people co-opted by organised crime because they see no other options for their lives, no dignified and well-paid employment, and so unfortunately they end up dedicating their lives to illicit activities.
It's always been said that when the United States sneezes, Mexico catches pneumonia. How are you going to be able to provide the better standard of living that you have promised the Mexican people, 50% of which almost live in poverty, when your economy depends so closely on the United States, your main trading partner, especially at a time when the U.S. economy is so weak?
Mexico has to again take advantage of the advantages that our free trade agreements with 32 nations give us. Without question, the most important and most relevant of these international relationships is with the United States, which derives from the advantage that our geographical location gives us. But we also have to strengthen our internal market, and that requires structural reforms, like the ones I've promised. I'm talking about labour and energy reform, the reform of our social security system to guarantee basic conditions of well-being for all Mexicans. These are the great challenges. They're the objectives that I've outlined, and of course, they will put my government's capacities and abilities to the test. The Mexican people will be the ones to judge the achievements of the administration that I will lead.
Are you considering to open up Pemex to more foreign investment, very much like Petrobras did in Brazil?
Lucia, I've been very clear on this point. My proposal in the energy sector does not imply privatization. I want to make it very clear that there will be no privatization, not even of one part of the company. No privatization. But taking into account the successful experiences of other countries, there will be the opportunity to have some participation of the private sector to achieve more productivity in the company. I'm talking about private sector participation in the areas of exploration, exploitation, refinery. These are the areas that Pemex can no longer afford to postpone. We must improve the infrastructure and the capacity of the company if we want to do it with our own resources.
Would you agree that in the last 12 years, Mexico has played a diminished role in the region? And if you do agree, what will be your position?
Mexico has to work to recover the leadership it's lost in Latin America and the world. And this will be possible not only for our diplomatic work, but through the impact that Mexico can have in the international context through its achievements at home. I think Mexico has lost leadership because of our unfavourable and even critical scenario in our country's economic and social development. When there's not a good performance inside the country, it's difficult for the country to become a reference point for other countries. The leadership Mexico will achieve abroad will be a result of the achievements and performance that we obtain at home.
Finally this week, we're off to the circus and the question of whether you can actually make money out of this very traditional form of entertainment. Or maybe you go less traditional, like Cirque du Soleil, and sell 10 million tickets a year. Stephen Cole took his seat ringside to find out.
Flying through the air with the greatest of ease, but is modern-day circus still pulling in the crowds? Well, this one is. Cirque du Soleil is constantly exploring new markets and is now introducing itself to Qatar, which has the highest per capita income in the world. It's a dramatic mix of circus arts and street entertainment, which is today a global entertainment enterprise. This show is sold out at a time when smaller, more traditional circuses are struggling to survive. John Hayes of the Moscow State Circus says while his show's doing well, others just don't have the resources.
A lot of the others do struggle a bit because the quality's not there. You know, if they're not good enough, people aren't, in times of recession, in times when you're going to be careful with your money, if you go and see a show one year and it's not very good, you're not going to see it the next year.
Back in Doha, the performers practice for hours every day. They've got to be sure of getting it right. The circus is tailored to modern tastes, but still has a lot of life left in it yet.
It looks a risky business, but Guy Laliberté, the founder, didn't think so when he set up Cirque du Soleil in 1984 with just a handful of acts. 28 years later, Cirque du Soleil is a global entertainment phenomenon. There are over 1,000 artists, 5,000 people looking after them, and last year the business generated $1 billion in revenue.
And that is where we're going to leave you for this week. If you want to get in touch with the show, 3 easy ways to do it. Either send a tweet to me at Kamal AJE, business editor at Abid Oliver Ali, or send us an email if you like. Counting the Cost at aljazeera.net is our address. And then you can head over to aljazeera.com/business. You can link on to the CTC page. We pop all our episodes up in full for you to catch up on whenever you'd like. That's it though for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.